Good morning and welcome to today's episode of Crypto Digest. We've got a packed show for you with some major developments in the world of cryptocurrency. I'm joined, as always, by my co-host.
That's right. We've got a couple of big stories to dive into today. The first one is a real doozy. The co-founders of HashFlare, a crypto mining operation, have pleaded guilty to running a Ponzi scheme that netted them a staggering $577 million from hundreds of thousands of investors around the world.
That's right. Sergei Potapenko and Ivan Turogin, both Estonian nationals, are now facing up to 20 years in prison for their crimes. This is a classic case of a Ponzi scheme where early investors were paid off with money from later investors, all while the perpetrators were lining their own pockets.
Exactly. And what's really striking about this case is the sheer scale of it. $577 million is a huge amount of money. And it's clear that these guys were able to convince a lot of people to part with their hard-earned cash. It's a sobering reminder of the risks involved in the crypto space and the importance of doing your due diligence before investing in anything.
Absolutely. And speaking of investments, we've got some interesting news from the world of traditional finance. GameStop, the video game retailer, saw its stock price spike yesterday after reports emerged that the company is considering investing in Bitcoin and other cryptocurrencies.
That's right. According to a report from CNBC, GameStop is looking to get into the crypto game, and investors are clearly excited about the prospect. The company's stock price rose from around $26 to a peak of nearly $31 after the news broke, before settling back down to around $28.
Now, it's worth noting that this is just a rumor at this point, and GameStop hasn't officially confirmed anything. But if it is true, it would be a major development for the company and potentially a big boost for the crypto market as a whole.
Exactly. We've seen a number of traditional companies dipping their toes into the crypto space in recent months, and it's clear that there's a growing interest in the technology. If GameStop does decide to invest in Bitcoin, it could be a big vote of confidence for the market and potentially a catalyst for further growth.
Well, we'll be keeping a close eye on this story as it develops. In the meantime, we want to hear from you. Do you think GameStop's potential investment in Bitcoin is a good move or a recipe for disaster? Let us know in the comments.
And we'll be exploring more of the implications of this story as well as the HashFlare Ponzi scheme throughout the episode. Stay tuned for more on these and other major crypto stories.
Building on what we discussed earlier about Bitcoin's recent surge, it seems like the effects are being felt across the industry. Coinbase just released its quarterly earnings, and the numbers are staggering.
That's right. Coinbase reported a revenue of $2.3 billion, with transaction revenue surging 270% compared to the same quarter last year. It's clear that the recent Bitcoin boom has brought retail investors back into the market.
And it's not just the revenue numbers that are impressive. The fact that transaction fees accounted for $1,560 million of that revenue is a clear indication that Coinbase is benefiting from the increased activity on its platform.
Exactly. And it's interesting to note that this surge in revenue coincided with the U.S. presidential election. It seems like the uncertainty surrounding the election led to increased market activity, which in turn benefited Coinbase.
Speaking of uncertainty, Elon Musk is making waves in the tech world with his new AI chatbot, Grok. He recently announced that the next generation of Grok is just weeks away from release and described it as scary smart.
That's right. Musk claimed that Grok 3 has already outperformed every other AI model in testing, which is a pretty bold statement. He even said that it comes up with solutions that you wouldn't even anticipate.
It's hard to know what to make of this announcement, but one thing is certain. Elon Musk is not afraid to push the boundaries of innovation. And with his track record of disrupting industries, it's definitely worth keeping an eye on what he's working on.
Absolutely. And it's interesting to consider the potential applications of a chatbot like Grok in the crypto space. Could we see AI-planted trading bots or even AI-driven crypto investment strategies?
That's a great point. As AI technology continues to advance, we're likely to see more and more applications in the crypto space. And with players like Elon Musk and Coinbase leading the charge, it's going to be an exciting space to watch in the coming months and years.
Definitely. We'll be keeping a close eye on these developments and bringing you updates as more information becomes available. In the meantime, it's clear that the crypto space is heating up, and we're excited to see what's in store for the rest of the year.
We've been discussing the potential impact of AI on the crypto market, and I think our previous conversation about the increasing use of machine learning and trading strategies is especially relevant today. Building on what we discussed, a team of international researchers just unveiled a new open-source AI model that's giving some of the most advanced AI systems a run for their money.
You're talking about OpenThinker 32B. I saw that it actually matched and occasionally surpassed the performance of DeepSeek, one of China's most sophisticated AI systems. What's really interesting here is that OpenThinker 32B achieved this with far less training data.
Exactly. The model achieved a 90.6% accuracy score on the Math 500 benchmark, edging past DeepSeek's 89.4%. This has significant implications for the development of AI in various industries, including crypto. With more efficient models like OpenThinker 32B, we might see more widespread adoption of AI-powered trading strategies.
And speaking of widespread adoption, the memecoin market is still going strong, although it's a wild ride as always. I saw that Changpeng Zhao's dog was the trend of the day on Thursday, and it had some unexpected consequences.
Yes, CZ's dog made headlines after he posted about it on X. Apparently, a memecoin called Broccoli Coin was the beneficiary of this unexpected attention. But, as you said, the memecoin market is notorious for its volatility, and it looks like this particular coin's success came at the expense of others.
It's a classic example of the dangers of playing in an anything-goes market. These memecoin cycles can be incredibly short-lived, and it's not uncommon to see a coin's value skyrocket and then plummet within a matter of hours. It's a high-risk, high-reward game that's not for the faint of heart.
And yet, despite the risks, the memecoin market continues to attract new players. Perhaps it's the allure of making a quick profit or the excitement of being part of a rapidly evolving market. Whatever the reason, it's clear that memecoins are here to stay, at least for the time being.
Well, as we've discussed before, the memecoin market can be a bellwether for the broader crypto market. It's a reflection of the community's sentiment and can often indicate trends before they reach the more established cryptocurrencies. So even if you're not directly involved in the memecoin market, it's worth keeping an eye on it.
Absolutely, and we'll continue to monitor the situation and bring you updates as the market evolves. In the meantime, it's essential to remember that the crypto market is inherently volatile, and it's crucial to do your own research and set clear risk management strategies before investing in any asset.
So we were just discussing the potential implications of the EU's new crypto regulations on the industry as a whole. It's interesting to note that across the pond, the US is taking a decidedly different approach, particularly with President Trump's plans for Bitcoin mining.
That's right. The president's promise to mine all remaining Bitcoin in the US has sparked both excitement and concern. On one hand, it could be a huge boon for the industry, potentially leading to a surge in jobs and economic growth. On the other hand, the environmental impact of such a large-scale mining operation could be devastating.
Building on what we discussed earlier about the environmental concerns surrounding crypto mining, this plan could exacerbate the issue. The energy consumption required to mine Bitcoin on such a massive scale would likely lead to a significant increase in greenhouse gas emissions.
Speaking of which, it's worth noting that this plan seems to be at odds with the growing trend of companies and governments prioritizing sustainability and reducing their carbon footprint. It will be interesting to see how the Trump administration balances the economic benefits of Bitcoin mining with the environmental costs.
Meanwhile, in other news, Eric Semler, the chair of Semler Scientific, has suggested that Zoom Communications should consider adding Bitcoin to its treasury assets. He argues that this could help shake up the company's sluggish growth and stock performance.
That's a fascinating idea. By embracing Bitcoin, Zoom could potentially attract a new wave of investors and capitalize on the growing interest in crypto. It's also worth noting that this could be a strategic move to diversify the company's assets and reduce its reliance on traditional markets.
Semler's proposal highlights the growing trend of companies exploring the use of crypto as a treasury asset. As we've discussed before, this could be a game changer for the industry, providing a new use case for Bitcoin and other cryptocurrencies.
And it's not just Zoom that could benefit from this strategy. Other companies with stagnant growth and stock performance could also consider adding Bitcoin to their balance sheet. It will be interesting to see if other companies follow Semler's advice and start to explore the potential of crypto as a treasury asset.
As we continue to follow these developments, it's clear that the intersection of crypto and traditional finance is becoming increasingly complex. We'll be keeping a close eye on how these stories unfold and what implications they may have for the industry as a whole.
Absolutely. And as always, we want to hear from our listeners. What do you think about President Trump's plans for Bitcoin mining? And do you think companies like Zoom should start embracing crypto as a treasury asset? Let us know in the comments or on social media.
As we wrap up today's show, I want to circle back to the Story Protocol launch we discussed earlier. The idea of a blockchain dedicated to intellectual property is fascinating, and I think it's a great example of the innovative ways blockchain technology can be applied beyond just cryptocurrency.
Absolutely. And with backing from Andreessen Horowitz, Story Protocol has some serious firepower behind it. The concept of allowing creators to register their IP and get paid for it has huge potential. It's a game changer for artists, writers, and musicians who struggle to protect and monetize their work.
That's right. And it's not just about protecting IP, but also about creating a new revenue stream for creators. By tokenizing IP, Story Protocol is essentially creating a new asset class. It's going to be interesting to see how this plays out in the coming months.
Meanwhile, Coinbase's Q4 revenue numbers are a testament to the growing demand for cryptocurrency trading. $2.27 billion in revenue is a staggering figure, especially considering the estimate was $1.84 billion. That 185% increase in trading volume is a clear indication that more and more people are getting into crypto.
Yeah, and it's not just retail investors. Institutional investors are also starting to take notice. We're seeing more and more hedge funds and pension funds allocating a portion of their portfolios to cryptocurrency. It's a sign that crypto is becoming increasingly mainstream.
But what's also interesting is the impact of external events on the crypto market. Coinbase's Q4 revenue was boosted by the bull run surrounding Trump's election victory. It's a reminder that crypto is still closely tied to traditional markets and can be influenced by external factors.
That's true, but despite the volatility, the overall trend is clear. Crypto is growing and it's here to stay. As we head into the weekend, I think the key takeaway is that the crypto market is becoming increasingly diverse and resilient. We're seeing new use cases emerge, and the infrastructure is being built to support them.
And from an investor's perspective, it's essential to stay informed and adapt to changing market conditions. Keep an eye on Story Protocol and other innovative projects, and don't be afraid to diversify your portfolio.
Well, that's all for today's show. Thanks for tuning in, and we'll catch you all on Monday. In the meantime, be sure to follow us on social media for the latest updates and analysis. And if you want to stay ahead of the curve, be sure to check out our exclusive content on our website.
And don't forget to subscribe to our newsletter for the latest news and insights delivered straight to your inbox.
Until next time, stay crypto savvy, everyone.